Hi there folks, welcome back to the EdgebyRS Academy Session Insights. I hope all you guys are enjoying your weekend and had a good trading week. For today's session, I'll be talking about why we shorted at 52.90s on Wednesday. Now, I do recognize that a lot of traders were long into 52.90s or looking for a potential breakout given the long consolidation seen. And well, there was merit to the idea. ES was holding the open, which was at 52.82. ES kept holding the period A highs as well. All of this supporting the potential idea to stay long. However, despite being aware of these references holding, we still explored a short and held it with confidence. Now let me tell you why. It's quite simple, right? It all starts with the structure. This is very important, right? I see a lot of folks, they look at MGI, they look at price action, and that's when their bias is essentially flipping. However, when you always zoom out, you will have a very clear picture. So let me just start with that structure first before I dive into 52.90s. Now, it all starts with our weekly plan where I shared a profile chart with you guys. Now, I don't know how many of you are subscribed to Substack, but yes, if you indeed are looking for something in-depth analysis for the week, then I'm pretty certain you will find value in my Substack. So getting back, as you can observe, what I had done over here heading into the week, I merged the post CPI consolidation, left Thursday's profile as it is because that is where we had formed an excess and ultimately filled the gap, explored outside of the range, and then viewed Friday independently as well. But what this actually enabled is it allowed us to identify that value started migrating lower. And at the same time, again, if you're following my weekly plan, 53.27, 53.32, 33 has been an extremely important zone for me, and it was this week as well. And this value migrating lower despite spending as much time up above here gave a potential indication that this could be a distribution whereby ultimately the resolution could be lower, which was validated by the value migrating lower and having these gaps as well as the untested 52.20s. And let me just quickly walk you through right here, which was the outcome of the PPI release. Now, these were the two magnets that we had in mind, which is 52.60s, the value gap, as well as 52.20s. Those were the two magnets we had. And of course, based on this structure and what happened on Tuesday, which is very important, and as you can observe here is we had the first test at 52.90s. We formed a lower high, of course, but look what happens on Tuesday when we come back test the same launch pad of Friday's short squeeze. Observe what happens here, another push higher, but essentially identical highs or equal highs, which means the buyers here, this was the first indication to us, the buyers here clearly were lacking the impetus to break through on the back of value migrating lower. The overnight session continued to liquidate, and now this becomes our key point of interest. As I drag this to the left, you can see Friday's support, Tuesday's support turns into resistance here. And is why, now let me get to the structural bit over here. Friday's session ended in a P-shaped profile. Now this P-shape is important because if you understand what a P-shaped profile means, it represents a potential short squeeze. Now, Given that this was a short squeeze, to validate that short squeeze, you ideally wanted to see the action developing above the P top. That did not happen. Instead, the subsequent days started building within and exploring below. So it was very clear that these buyers on Friday did not have that sort of strength. So that P was very important because all we know is Friday was a short squeeze because we also had a holiday ahead of us, Memorial Day. Markets tend to be optimistic, so we seldom see a breakdown ahead of these bank holidays. But what happened thereafter tells you the story. We failed into Wednesday, back below the lows, which became important. And not only did we get below the lows of Friday, not only did we get below the P-shaped profile or the value, but Friday was also an inside day, which is Friday was within Thursday's range. So we also broke below the inside day range. Now that is when you want to recall the importance of balance rules. They're very important because what they tell you is as soon as we exit this box, let me quickly draw it for you. So this is a blue box that I've drawn. It's the inside day of Friday. I'll stretch it all the way to the right. And what you see is a clear breakdown, and based on the framework that we follow, the list framework, we are finding a clear acceptance below. And what does the balance rules suggest to us is very simple. Breakdown, backtest holds for multiple periods or as per the list framework, and then we are looking at a potential 100% extension to the downside. So it starts with 50% and then subsequently 100% if there's traction. And that's precisely what we got into Thursday overnight session. So that's where the balance rules come into play, because now it's telling you we've exited the balance and we are finding acceptance below multiple periods. So in terms of structure, yes, there was merit to be long. Sorry, as per your MGI, there was merit to be long. But as you look at the structure, you realize, damn, Friday squeeze rejected, inside day rejected. As we headed into the week, we knew value was migrating lower. Now again, remember, only if you viewed the profile like we did. Had you merged all of these, you would not find this nuance of value migrating lower. So it's very important on how you even look at profile, right? So given all these factors, and then add the fact that EU session ended at 52.90. Now typically, if you guys have been following my recordings, my videos, you would have realized that I give a lot of importance to EU close. Again, EU closed at 52.90s, but no traction whatsoever. So the point is very simple. If buyers were truly having that strength, we should have seen some form of breakout attempt. That was absent. We kept holding below, and this is why we took a short at 52.94. This is my live entry right here. Of course, I was even short during the London session, higher up at 53.02. But again, even RTH, we took a short right here, and keeping the entire structure, keeping MGI in mind, that if buyers have been failing to find traction despite holding for as many hours, then yes, given the magnet below of 52.60s, a break down is what we were observing next. Now, this wasn't the only reasons, right? We also observed what NQ was doing. Now, this is very important, guys, because NQ on Wednesday was the stronger index of the two. Look back at your charts and you will realize that. Despite its strength, now how did I gauge strength? Very simple. It was an opening drive higher. Period B pretty much held more than 50% of period A. That was signaling strength again to us. Third, we closed the NQ gap pretty quickly, whereas ES was still chopping around, fair and square. But look what happens after that. NQ tests its prior day value area low, and ES is still stuck at the lows of Friday and Tuesday. It couldn't even manage a move into Tuesday's value area low. So for me, when I'm reviewing the action real time, what I realize is NQ, which is the stronger index, is unable to reclaim Tuesday's value. At the same time, ES, which has just been weak any which ways, is still unable to get back above the all-important 50 to 90s. And when we bring in this confluence together, when we bring all these analysis together, the answer for us was one. We don't want to be short, we don't want to be long into 50 to 90s. The better bet is to observe for a breakout, back test to join for a potential long, but definitely not at 50 to 90s. Instead, we want to be short because we don't go long into resistance, neither do we short into support. So that was our thought process and is why we took this trade. It was called out live again. This is my trade right here. And with that, we ended a very, very successful Wednesday one that literally surprised us with the continuing flush after hours and into Thursday as well. Thursday and Friday, of course, for most part. So that was our reasons. I hope you found this recording helpful. The whole idea behind hosting these short sessions is to give you an insight on how we think, my commentary, my thought process, because ultimately the idea is very simple. We need to have a well-defined and a clear thought process to navigate these markets. So I hope there was something for you to journal, something you learned from here, and something that you can in fact apply as we move on to next week. Remember, balance rules are absolutely essential. So do read them up, and if you need any help, you can always reach out to me on Twitter. If you're part of Discord, you can send me a direct message on Discord, or if you're part of Substack, you can still send me a message or an email. So with that, I wish you all a good weekend. Enjoy your Sunday, and I'll see you again next week.